My name is Donald Wangunyu, and I have been a technologist and investment banker for about 20 years. I started off with technology, then did a lot of work with high net worth, and now I am focused on bringing the exchange to you and me. Standard Investment Bank was founded in 1995. They are, in my view, the pioneer bank in the country, just based on the level of innovation and investment that they have done. And FourFront is a division of Standard Investment Bank, a digital division. And as I mentioned, the entire work of FourFront is simplification to make this whole exchange conversation easy, and being digital, we're able to distribute it far and wide, both to every corner of Kenya as well as to the diaspora. So by training, I am a computer scientist. That's where I began. And as fate would have it, so it's not anything I planned, but as fate would have it, I have always been in financial markets, either investment banking or commercial banking systems. And when I came back to Kenya, so I was in the US, I was diaspora, which is why I mentioned diaspora before. I was diaspora, and when I came back, I brought some of the innovations immediately. I mean, you could look around and see, and the first thing I saw was that there was no direct market access. I couldn't, as an investor, enter some platform and go in. And so the first step was pioneering SMS trading, online trading, back in 2008. And so from the perspective of where I was coming from, that was a no-brainer. But when I brought it in, there was actually quite a bit of fanfare. With direct market access, we unlocked a substantial opportunity in the market. Now someone was able to, from the comfort of their desk, their phone, wherever they are, they were able to access the market. We also then saw that M-Pesa came in, and so now we were able to do the money, depositing and withdrawing. Then we found what was then the most critical question that everyone has, which is, what do I buy and what do I sell? And that is a very difficult question, and it's the question that actually makes money. That's answering that question correctly is what makes people money. And so I've devoted the rest of my career from that point on, from 2008 till today, in answering this question. How do you help, or how do you support a normal citizen going about his day answer the question of what do you buy and what do you sell in the stock market so that you can make money? And that's my career journey to date. It is always answering technologically the questions that people are asking about simplifying the exchange. In Kenya, my first stop was Safaricom during the IPO, and I made a lot of money with that. And I'm glad that the stock exchange, you don't have to pay taxes, you don't have to pay capital gains tax, because those were good times. We made a lot of money. What we want to understand is that the stock exchange solves very specific problems. So when it started, it was giving the opportunity for colonialists to exit Kenya, to exit their investments in Kenya before independence. That was the first role. And that's why you get this, you'll see a lot of agricultural type companies like Kakuzi and the rest that came into the exchange. The second evolution was because the time when the colonialists were leaving, Kenyans didn't have enough money to buy these shares. And so the government bought the shares. And so with the maturity of the company, the government then took the position to privatize. And then there's always a big word called privatizing, right? So I think people out there can understand now. It's when the government now is saying, okay, let's give these companies back to the citizens. And that was the second wave. And that was a golden time. There were IPOs all over the place. The third wave in this evolution was when the foreign investors discovered Kenya. And we joined what's called the MSCI index as a frontier market. And they came in such numbers that up till now, they are 60 to 70% of the investors in the exchange, right? So today, 60 to 70% of trading activity happens by foreign investors. And then that leads us now to where we are about to go, the fourth wave. The fourth wave is driven by the government's bottom-up economic agenda, as well as the young demographic of our population, who are all technology natives. Let's call them. They didn't move there. When they were born, they entered technology. And so you are going to see the highest investment in technology coming in to support this market. And we are just, many of us, I want to say me because I'm hoping I am considered one of the people who's native technologically. I probably am not. But you will see such a heavy investment in this fourth wave. It will be a game-changing situation. So when I come to the market, when I become an adult, I have skills and I exchange those skills for money. And if I have the right training, I start saving some of that money. Now, if I'm trying to build wealth using this mechanism, it is the hardest way to build wealth. It'll take you a long time, and you're pretty much guaranteed you will not pass your economic ladder. You will not be able to grow. The second thing is, for this person who has been saving, they usually then become entrepreneurs. They take that money and become entrepreneurs. And when they're entrepreneurs, they're exchanging other people's skills for money. And so it's a great way to build wealth. But it's the riskiest way to build wealth. Businesses fail all the time. And so you get a third one, which is I take my savings and I give it to proven entrepreneurs, right? People who have done this entrepreneurial game and they have shown that they can actually sustain a company. And so in that step, you now have the opportunity to grow your wealth faster. But because these are proven managers and proven entrepreneurs, the risk is reduced. And that's what the exchange is. You are giving people your money, they are giving you shares or a piece of the company, and you have the best risk-adjusted return. And that's why the stock market is the best place to put your money. When you start off, you will get tempted to keep up with your friends. Flashy cars, nice shoes. And that's called lifestyle inflation. And it's emotionally painful to decide that I shall not have this lifestyle so that I can build my pot of wealth, my beginning foundation of wealth. And so that's the first element of emotional risk. So as we go up the emotional risk ladder, we get to the question of exposing myself to risk. And what you will talk to when you meet 10 people, 9 of them tell you, I don't want any risk, I don't want any of that. And what happens is you have to understand that you are looking for risk because that is the only way you'll get rewarded. And everyone has had risk reward, right? What people tend to forget is that you only get reward because you took risk. And so you are looking to expose yourself to risk responsibly and knowledgeably. And yet again, that's emotional risk. We have to manage that. The third element, still connected to emotional risk, maybe we can use the statement that a lot of people have had. Buy when people are fearful, sell when people are greedy. It's a very famous statement, but it is packed with emotional risk. At the moment of making the decision, you're going against what other people are doing. And so you have to be quite firm in your understanding, your ability to manage your emotion in order to be able to do that. In future, when you're looking back, the statement seems obvious. Oh, of course I bought. But the idea of how much emotional risk you had to manage in making those decisions is substantial. The last one, just giving a flavor of what emotional risk and how it affects us in building wealth, is don't jump in because others have jumped in, and don't jump out because others are jumping out. Once again, you have to manage your own emotional risk to understand this is what is happening, this is what I understand of this position, and this is what the decision I'm going to make. And one of the elements we do now in the work we are doing with FourFront is attach to your circle of friends and help you have a more concrete conversation about this risk, so that the people who are more fearful do not turn a discussion negatively, and the people who are overly aggressive are able to be tamed a bit. And so your circle of friends, in terms of managing this emotional risk, is a critical start getting learnings about the stock market. Be able to read a price graph. These skills are life skills. In any investment that you do, be it the stock market or anywhere else, you have to be able to read the environment. And so you have to start working in that area. And it creates a lot of opportunity. For instance, the CDSC has created the most powerful avenue of making money, which is the ability to make money when the price is falling. It's called short selling. Now, the CDSC can do that and they can create an infrastructure, but you as the investor need to be able to understand how to take advantage of this so that you're making money when the price is rising, making money when the price is falling. You need practical experience, and FourFront gives you the ability to do that together with your friends or individually. Be able to take a share and decide, based on what I understand, would I buy this share? And then look at that same share 6 months after or 3 months after. Did I make money? Would I have made money or would I have lost money? And learn from that and be able to encourage yourself and your circle of friends about it. You also need significant technological support. You are now, as a young investor or an investor starting off, you are in a field where technology is going to drive the future. And so you need to be able to get into applications like Dosika to be able to get detailed access. FourFront offers what's called algorithmic trading, and so we have systems that are searching for opportunity to present to you. And so you need to be very comfortable in that environment because that is the future. And then once you are able to do that, so you have learnings, you have practical experience, and you have technological support, you are in the best position to make money. It's not magic, people. It's not magic that people are doing. If you get these 3 elements, you're well on your way. You're going to make money in the stock market, as long as you've managed emotional risk. And I wish you well for that, because I would want to be a young person today starting off in this market and in this environment. What I would want to encourage the retail investor is to always ask themselves, why is it that foreign investors can come into this market, make money and leave? Yet it is my market, it is my birthright. Now don't get me wrong, we need foreign investors. That is a substantial part of a maturing country. But when you sit somewhere having your cup of tea or whatever, always ask yourself, there are people coming in, making money in a place that is my birthright as I am. I can access it at any time, and I have the right to do that. Why am I not making the same money that they are? And then set forth to answer that question, and the exchange will embrace you with open arms and give you a place that you can call your home and your way of making